People paid $57.50 for a fund whose audited net asset value was $24.05 a share. Why? One reason, OpenAI. The gap reveals how Wall Street is trying to sell early access to ordinary investors while hiding those tolls inside. The fund was RVI, the Robinhood Venture Fund 1, and its net asset value was $24.05 on March 31st. And on May 26, its market price closed at $57.50, compared with its net asset value. That was a 139% premium, or 2.39 times the last audited value. Those dates matter. Why? Because the private markets update slowly compared to the public markets. RVI added investment after March. This wasn't a same-day comparison, but the gap was still a signal. The retail investor wanted exposure to private companies like OpenAI, Stripe, Databricks, Revolve, and other companies that you can buy through regular brokerage accounts like Robinhood or E-Trade. But the premium wasn't the strangest part. The US had about 7,000 publicly listed companies in 2000, and by 2025, it had about 4,000. That doesn't present the market value, but it shows the shelf got smaller. And many companies in these days go public much later than what it used to be. Then the SpaceX IPO made the pattern impossible to ignore. It roughly spent 24 years in the private market, and this June, they went public at the valuation roughly around $1.7 trillion. Almost all of that valuation came before the public trading, except there was a catch. RVI didn't own private SpaceX share. It received a $6.75 million IPO allocation, which is different from owning shares in the private company than getting allocations for the IPO. Private shares, special vehicles, tokens, and public shares are different exposures, and those labels matter. Still, the direction is clear. Robinhood built a listed fund to invest in private companies. Morgan Stanley bought a private share marketplace, Equities, and BlackRock is pushing for tokenization. The Wall Street is turning the wall into gates. Then it found a large pool, retirement accounts. The 2025 executive order opened a regulatory pathway for alternative assets. Proposed rules followed this March. No savings move automatically, but a $10.1 trillion 401k market entered the conversation. The access is real into private markets, like RVI held a direct company-approved investments. Then they bought a $75 million off OpenAI common stocks. But access is not a good deal by itself. Now we get to the toll. First, the visible toll is the fees. And RVI's 2% management fee is temporary 1%. Robinhood showed a 2.13% net expense ratio during the waiver period, and indirect vehicles can add costs. The second toll is the easier to miss, which is the price itself. A closed-ended fund can trade par above or below. At March 31st, 53% of the RVI's net assets sat in a government money market funds. So the premium is also applied to large cash-like positions. I understand that private markets can lag reality. A premium can forecast higher values, and it can also be a scarcity and excitement. You just need to know which story you are buying. Public markets aren't empty, but the demand for early access is strong, and Wall Street is racing to package it. So when one of those packages reaches you, ask two questions. What are all these fees? And what is the underlying value compared with the price? Getting in early only helps if you do not overpay. Follow if you want to learn where the tech and capital are moving next.